So we really have some special volatility that we're having in some of these days. Look at this bar. This is a 5-minute bar, and this one bar in 5 minutes is 230 points. That is a huge bar. That is 4.6% in one bar. And we can see it wasn't just one bar. We had another bar and then several more bars that were really large. I mean, this bar here, this is 100 points. The ATR, the average true range, at one point was almost 80. So that means the average size of the bars were 80. So that's really special. What caused this? I believe there was some leak from the Trump administration saying that they thought there was going to be a pause on tariffs, and then that turned out to be fake news. So I mean, I'm not sure exactly what happened there, but I'm pretty sure that's what caused this. So the market was thinking there was some tariff relief coming, and that's what caused all this buying. And then, turned out it was fake or something like that. So then the market, a few minutes later, was basically back where it started. So these bars are huge, and it's really difficult to be trading in this when the market's so volatile. There's at any moment news can completely change what the market was doing, and it can change it in a huge way. Like I said, I mean, this is almost a 5% bar. If you include this bar, it actually went up more like 6%. We almost went limit up today. Now, what I mean by that, we almost halted up. So the market almost went so strongly bullish that they would have had to halt the market for 15 minutes. Now, that's actually, when they do those halts, that's from the prior day's close. So this wouldn't have been 7% up. And 7% is where that first halt is. So if the market goes down 7%, it halts the market. Or if it goes up 7%, the market is halted. They do it from this close. So this wouldn't have been 7%. But if they did it from like the open of the day, that would have been, that would have been just about 7%. So in a way, we almost got halted on the way up here, which really would have been special. So because there's really not, the market's just too crazy right now. There's really only one thing I'm going to point out on the 5 minute. Then I'm going to talk about the tick chart for a little bit. One thing I'll point out here is that we have a triangle that formed. And we'll kind of talk about this triangle some. As you're seeing this form, what your mind should go to is that you want to wait on a breakout to happen and then a retest of this triangle. And then you can look to trade. So where is the breakout? Is this tail? Is this that breakout of the triangle? Usually not. Usually the market needs to have a breakout with more bodies to it. This is just a tail breaking out above this. And then usually it would need another breakout to happen that reverses back. So because of that, I would avoid trying to buy during this. I know it's tempting, but in my mind, I'm thinking the market needs to first pull back and test its apex before it decides to do something else. So I believe the market's going to pull back and test the apex of this triangle either during this close. It might sell pretty quickly, test this, or it'll happen tomorrow probably. And then from there, that's when you look to try to do a trade in either direction. So this first breakout like this usually is not the correct one. And since these bars are so large, you'd have to trade so small. And like I said, there's so much news. I think it's better either to not trade at all or trade as small as you can, and maybe you try to look at something like the tick chart. So here's the tick chart. What kind of trades you want to find the tick chart? Well, tick chart is best when you're in a trending market. And with our moves being so large on the 5 minute chart, right? Every single one of these bars has a trend within it because the bars are so large. So when we're trying to find trends when the 5 minute is trending and we're looking for trades on the tick chart, one, we want to make sure we're trying to swing trade because we can catch a move in a trend. Two, you really just want to look for pullbacks. We want to look for breakouts, breakout tests, and pullbacks with moving average, and then buy. So For example, we're above the moving average, moving higher. We're getting a series of higher lows and higher highs. Here, we're breaking out above the 200 moving average. You can see it tests it there and tests it there. Breaks through, it pulls back, and now it acts as support. Heads higher, comes back, it tests it again, even gets a little micro double bottom. And you're going to have bulls buying above that. Now, after this is a breakout test. So, to me, that would be a good buy for a swing. And you want to be trying to go for at least 2 times your risk, and you'd be getting out somewhere up here. And if you're noticing strong trends on the 5-minute chart, but you don't want to take trades on the 5-minute chart, or you're having trouble finding trades, then go down to a lower time frame like the 2000 tick and try to catch these trends. Try to find pullbacks. Try to find breakout tests. So once again, we're talking about these highs through here. There's support and resistance right here. Also, we have the 200 moving average, and we've broken out above it. Now we're testing back. Still in a bull trend. Reasonable to try to get a swing trade out of this. When you see this, if you're doing anything, you're buying. So if you're taking any trades, then it would be these pullbacks like this. This is a high one buy there. There's another buy. Now, these are a bit lower probability because it's basically just a pullback and then a high one. It's just the first time a bar is going above a power bar on a pullback. So you don't have that much going for you. But if you're taking any trade in this, then that's what you need to be doing. You need to be buying and trying to swing trade. More examples. Several bear bars down, but this is not enough to reverse all this buying, at least not yet. So one leg down, pull back. Here's the second leg. And then now you get another bull bar closing right above the moving average. So once again, I think if you're doing anything, you want to be trying to buy these kinds of pullbacks to the moving average. Buy, swing trade up, exit somewhere over here. And I'm not going to go through the whole day because on a high volatility day like this, you're going to have many hundreds of bars on the tick chart. So we're not going to go cover all of those. But how was my 1 micro long doing? So this is where it's at. So actually, it was positive this morning. It was actually positive by 80 points at one point up here. And, it's funny. It would have only taken one more bull bar like this, and it would have gotten the profit target up above. So, what's next? Well, at least for this trade, my plan is going to be the same. Either I take a profit up here, or I'm going to buy lower, and I'm going to take a profit after a pullback and then a rally. All right, so that's my plan there. Looking at the daily chart, here's our daily chart. So added in our moving averages. You can see we're way below the moving average. Possibly a second leg trap here. So first leg, pullback, second leg. It would seem like we still have more down. I mean, this has been such strong selling. Even if we go sideways, it would still seem like we have a bit more down. It's tough. Like I said before, I mean, there's so much. All this is because of tariffs. Right? It's completely dependent on that. Whatever the news is, that's what's going to move the market. Nothing else matters right now. It doesn't matter what some individual company, what their earnings are. Earnings don't matter at all right now. In fact, for a company right now, now's a good time. If they have bad news, they should go ahead and put it out, because they're already hit hard by this. And like I said, nothing else mattered. Like the earnings, like no one cares about what their earnings are right now. They care about what the tariff news is. The VIX, I'll pull that up. The VIX hit 35 on Friday. Okay, so here is Friday morning. The VIX hit 35 right there. And here's that Friday, April 4th. From our videos that I've shown about how to buy the dip or when to buy the dip, the VIX was a very important part of that. And I don't want to lean on the VIX too heavily as saying that's like the one thing you should be looking at. But we looked at many examples where the VIX, when it went above 35, there was either buying immediately that lasted for a few days, a couple weeks or more, or there were a couple of days sideways to down, and then there was buying. So here's one day of sideways, and then maybe another day of sideways, and then from the examples we looked at, then we would have more buying. Now, of course, I'm not going to claim that's what's going to happen. I'm just saying that's what we saw from the examples. So if we do get buying, I would take profits on my long here, and I would just take profits at that level, and then I would kind of be hands off, and I would wait for the market to drop more before I would consider buying again. So that's my take on where we're at. Really interesting days. Like I said, this was a 4.6% bar right here. That doesn't happen often, so it's kind of cool that we're get to see something unique. Maybe it's not so cool seeing your 401k drop so much, or seeing your investments drop, but at least you get to learn something, and these are some unique times. And so yeah, that's what I got. If you have any questions, let me know in the comments, and we'll be back tomorrow. See you guys.